Today we're covering iShares Select Dividend ETF, DVY. It has a top rating from JP Morgan, and a lot of people like this fund. Here's a little bit about DVY. It has U.S. companies with consistent history of dividends, yes. Access to 100 U.S. stocks with 5-year records of paying dividends, yes. Here are their holdings. Some of their top holdings are Valero, Gilead, Altria, Exxon, ONEOK. So it has energy, healthcare, pipelines, cigarette stocks because they have big dividends, and healthcare as their top 10 holdings. So this would seem like a decent fund. It has good holdings in it, and it has about, let's see what the yield is. It has about a 3% dividend yield. And so some people like this fund because of that yield. Okay, 3.38 quarterly. So you see that it held up well during the 2022 bear market. It just stayed up the entire time. It barely fell. So I admit that there's a reason why everyone should have it in their portfolio. It gives consistency and it shields from portfolio volatility. However, if you do a Morningstar test, you'll see DVY. Once again, okay, it's a 4-star fund, not 5-star. 4-star, yet people still love this fund. It's not 5-star like some of our other funds that we own, like Gove. You should check those out on our wall. We've done videos on those. They pay 15% dividends. DVY, 4-star fund. But look at what it did on the 10K test. It only made you $35,000. So if you had $10,000 invested in 2013, it only made you, well, $30,000. So yes, it held up well during the bear market. I understand why people want to hold on to this thing. But let's look at a USA fund, which I love to compare against right now because USA is one of our bigger holdings. USA is a 3-star fund. However, look, it made $45,000. So if you invested $10,000 in 2013, you made almost $45,000 in 10 years. So that beats DVY by a lot. So that's the thing about DVY that I don't understand. A lot of people make YouTube videos on DVY, and they love to do it for the views, I think. But I'm doing it just to simply cover DVY. It's an important dividend fund. And you'll see on the little dip there, I'm just going to add $1,000 because $1,000, if you put too much money in this fund, it won't really make a difference for you. As you saw on the $10,000 test, it doesn't make much money. So I don't mind having $1,000 in it for performance, because as I alluded to earlier, when the 2022 bear market came, it held up really well. So I'm going to have it in here for performance, but I only bought $1,000 worth because of these other funds that I have only $1,000 in. They're riskier. Citigroup, Altria is a holding within DVY, and it gives a bigger yield than DVY. And we're going to do a video on Altria soon, but sees 8% quarterly dividend yield. And it held up pretty well during 2022, except for this one drop that it had from I think that was an issue with their vaping division and how they sold off one of their vaping units. We could get into the details of these stocks and what makes them go up or down, but it really doesn't matter on this channel. On this channel, we're only focused on dividends, which cash flow in 10 years. So if Altria has an 8% dividend, it's going to cash flow in about 10 years. 11 to 12 years, let's just say 10% dividend times 10 years, that's 100%. After that, it's pure profit. So we'll put $1,000 in a DVY, and we'll add to our margin of 222. We'll get it up to 223. It's Sunday today, so the market's closed. You'll see it when we place. The order will be placed when the market opens on Monday. I just want to buy some now before I forget. And I also want to tell you before I forget that we're down 5,000 on Friday, but 0.84% is the number that I care about, 0.84%. So look at up top, the Dow's down 1%, the NASDAQ down 1.6%, and the S&P down 1.05. We're down 0.84, so less than the market. So I know we're losing money, and it seems like a lot, 5,000, but you have to go with the ebbs and flows of the market. Our performance is beating the market year to date, as you can see, 19% versus the NASDAQ 8% and S&P up 3%. So this is how we're beating the market. We don't stay in funds like DVY. We only have $1,000 in DVY. We put most of our money in these funds, like a USA or CLM. Check out these on our wall. CLM pays a 20% dividend, and it's a 4-star fund. We've done videos on our wall about CLM. Go check that out. So CLM 4-star again, CRF 4-star. CLM measures the S&P and CRF measures the NASDAQ. DVY just measures those dividend holdings like I mentioned to you on the BlackRock fund site. So yes, these have nice holdings, but it's only yielding you 3.5%. These other names within the fund are yielding you much more than that. They're all yielding a little over 3. I know Altria is at 8, like I just showed you. Gilead had a 5% dividend a little while back. I don't know what it is now. So this is why we only have $1,000 in DVY. It doesn't make as much money as the other funds, period. Now, USA, it's similar to DVY. It has large cap funds, large cap value, 60%, and growth. And so it's a good blend of growth and value. And it also moves up on a chart, left to right. It doesn't just go sideways like Cornerstone. If you look at a chart of Cornerstone, it goes sideways, but that's what it does in exchange for giving you the 20% dividend. USA goes upwards, left to right, as you can see on the chart, plus it gives you a 10% dividend. So you get the best of both worlds with USA. You get stock movement and the dividend. DVY, once again, you get some dividend, you get some stock movement, but you really don't get enough dividend to make any difference in your life. And it doesn't give enough movement to make a huge difference in your life unless you put a ton of money in it. So for people starting out, I really don't advise DVY, except if you just want a small amount and you don't want any volatility and you just want to try out how the market works, then it's a good way to get your toes wet. But if you want to really make money in the market, you need to stick with these other 4-star funds like USA and Cornerstone because they pay bigger dividends and they made more money on Morningstar. So lastly, I just want to show you what we're earning per year. We earn about $100,000 a year. So here it shows about $98,000. Okay, most of them again are from our dividends that we just alluded to, like Cornerstone, USA, Gove, and these are 5-star funds, Riv, just like DVY, but they make more money. So I don't understand why people want to push it so hard on YouTube. Again, I get it. It shields your portfolio from volatility. It held up well during 2022. So for all those who are in it in 2022, props to them because their portfolio didn't see a big drawdown in 2022. But now we're in a new year, 2023. And it's time to get more aggressive as stocks are way off the highs. So I believe that these other funds like USA can outperform a DVY.